Okay. So good morning, everyone. Um, I hope you guys can see my screen. So in our video about other blocks. So we talked about other blocks, types of other blocks, and also how you can identify how or will be criteria as things you need to see before you confirm that something that a particular zone is a valid order block. So we made mention of the fair value and created that order block occurred. So once you have those three things, these are the three major things or three primary things that you need to see before you consider trend. Always use the 4 hour time frame for your fair value on power. I think to get an order block based structure, you can use this to create a new over create made this series of bullish candles before they move downwards to become an order block. So in this case now, you met the three criteria. This is the only three things you need to look at for before considering if a point or an area is a valid order block. So I remember I also told you guys in that video that you can if you the reason why you need these particular criteria right here is because if you go into the chart anytime any day you will see things that looks like order block. You see things that looks like other bearish order block, bullish order block, but you need criteria. So this helps you to know what you are looking for and how to look for it, right? So I don't really think there's not much to say about order blocks, but in terms of how you actually trade with order blocks, right? Like I said in that video, all you need to do is once you map out your order block, you just wait. That is why I normally say that trading is fine and 8 cents wait. Once you are done mapping out your zone, all you need to do in this move Wednesday, right? Friday, before the price came into that order block. Now, in most some cases, it might not be in this. Go back into example. We already was and the move that created, and this is the previous low. This is the move that created. So right here we have our break of structure, BOS. Now, criteria one, trend, downtrend. Criteria two, fair value gap. We already have fair value gap. Then BOS to criteria three. So this bullish move over here, before this swing down here, will now become our order block on this particular day. Swing that we don't, all right. So that into area, right? You guys here. If you guys are following, just drop something on the comment section. Our zones as all right. Now you can see that price came back to touch that order block. Okay, this scenario now, you go back into that other block to give you a setup. So it took, let me just say it took a day because you're not going to cancel today or Sunday. They're not the price. So meanwhile, in this area, sorry guys, let me admit other guys into this. Now, meanwhile, in this area, you can see that this is where price gave us our order series of order block as that Wednesday, all right? And it took that same Wednesday, Thursday, till Friday till price came back to the order block. Now, we are currently in that order block, okay? We've not really gotten a clear confirmation if we are going to sell or not. So in this case now, it might take up to Tuesday next week, because mostly Monday we range. So it take up to Monday or Tuesday next week to give us a sell setup. Now you might be asking, are you supposed to be waiting that long to take trade? Yes, because you are day trading, all right? You want to get your to allow price to retrace into like 2 to 3 days or 1 to 2 days to allow price to reach block. All right. So, like I said, 10% buying, 10% selling, 80% waiting. It's all about waiting games. Strategy is not a problem. Even from the things that we share on WhatsApp group, you already know the exact strategy I use. It's more of waiting up here. And you are sure, yes, but you have to also have other criteria here. So we'll get to or trying to trade into the zone. I call it trading into the zone. So you can also take a trade from here. But the reason why you should remember, you are taking a trade. Let's say, for example, we are you can see is the $1 $200. Now, the reason you are risking $100 is because you know that this is a trade that is following the trust. Trading is a game of probability. If you are following, please drop something in the comment section. I want everybody to follow this session because it's very, very important. So trading is all about probability. It's a game of probability. So you are not really sure what is going to happen in the next minutes. But what you want to make sure is that whatever happens in the next minute, on the next hour, and the next day on the charts, you don't lose more than you are willing to lose, but you make enough. Now, you can control the amount you are willing to lose, but you cannot control how much you can make because you cannot predict how far the market can go. But the only thing you can control is, okay, if this trade goes bad, I'm ready to lose $50 in this trade. All right, and you set your stop loss at that point. Now, back to the comparison. Now, in this trade, we took a profit, and anyone who follow that trade will be like 50% of what I would. So in this case, now I will risk like $50. Okay, compared to the $100 I will risk it. That is all about. That is what risk management is all about. We're still going to get to risk management class, right? So other blocks give you the edge, give you the confidence that this is big trading with the trader. You check over here. That same Wednesday, we created the same way a little bit so that you understand. And then to stop. All right. Now you're coming up on 4 hours and some moments on this house, then you are discouraging the price you or something like this. Price will go down. Then if we do something like this, you might do this. Then if we go sharply down again. Oh, that is messed up. Let me draw something else. So what price we normally do in a downtrend is that if we go down, if we do this, then if we go down sharply again. Then if we repeat the same thing, this is the internal structure now. Then if you go down again. Now, basically, what you are looking for, all right, is to catch this move over here and this move down here. So that is why interest are very, very important in trading. So in this case now, if you have, let's say, an order block on this area, which is a bearish order block, all you need to do is once you spot it out, wait for price to trade back into your zone, into your order block, look for a setup on smart time frame, then sell. It is as simple as that, guys. So that is how order blocks work. This is a bearish example. All right. I think that will be all in terms of the review. So if you have any question concerning this, please, I want you to drop your question before we move over to the psychology class. If you have any question regarding other blocks, or maybe from the video we made, or maybe there's something that's confusing that you might want us to talk about in next thing, then you let us know. Then before we can move over to psychology class, today just one session. I'm currently under the weather a bit, so we're not going to spend much time today. So if you have any question, you can drop in the comment section or just post it out or mute yourself. Then let's treat it before we move over to psychology. Okay, so I believe no question. So before we move on to psychology, there's something I want to show you guys. For those who are still struggling with market structure, there's something that will help you a lot. I dropped it in the WhatsApp group, but I feel not everybody saw that. So let me just show you something on the chart. Now, if you look at this, for example, you will see that it is scattered. For someone who is very new to smart money concepts or you are still trying to figure out market structure, it's got sometimes on the chart. Now, there are two solutions. Solution number one is that use higher time frames. Use higher time frames to spot your structure. Don't go looking for structure on the 15-minute time frame or the 1 hour time frame if you're actually trying to locate the trend of the market. If you're looking for a setup, you can do that. Because there's one thing that you're looking for, trend of the market and setup. Trend will give you what type of setup you should be looking for. But like I told you, if you go down to the smaller time frame, on the market that is trending downwards, you will still see buy setup, that will be clean and valid. Then you still see sell setup that will be clean and valid. But only one of them has a higher probability. Remember, trading is a game of probability. Nobody is using any magic or anything. It's all about increasing your odds, increasing the probability of that trade playing out. So in a market that is trending downwards, what you should be looking for is a sell setup. So for you to be able to identify the structure so that it will create the bias for you to know, okay, are we going to be selling or am I going to be buying? You need to go to maybe a higher time frame. If you cannot figure out the structure on the 1 hour time frame, move over to the 4 hour time frame. That's why 4 hour time frame is just the best to figure out market structure or direction of the market if you are day trading. Then number two is something you can use on TradingView, which is line charts. Now, what line charts means is that it will eliminate a whole lot of noise. I'm just going to show you that real quick. First of all, let me hide this drawing so that it's not be confusing. Now, as you can see, this over here is the normal candlesticks. This is the candlestick charts. Now, there are different types of charts. There is bar charts, there is highs and lows, there is line charts. So what you want to use is line chart. Now, if you go on your mobile, you see something like chart type, right? But if you're using PC, just come here, then go over to this area. Then you see this line, click on line. It will zero time frame, for example. Now, if you zoom in, now you will see that it is very easy for you now to identify the highs and lows. Now, in this case, basically all you need to do is for you to just pinpoint your swing high and swing low. Now, for you to do that in this case, what you need to do, what you need to just for you to say, okay, this is the swing, this is the swing. Drawing is coming back. Okay, this is the swing. Then this over here is the swing. Then this over here is a swing. Then this two is a swing. This one right here is also a swing. This one right here is also a swing. So you see that it will give you a simple, then you can just use on your in your head now. This is what you'll be doing in your head, right? You can eliminate this one, you can eliminate this one, then just use this straight up like this, then use this straight up like this, then use this straight up like this. So if you can now identify something like this, you will now see that just a minute. You will now see that's going to be this. It's going to be this. In a trending market, you are focusing more on the lows. All right, the highs might be a little bit scattered, but you are focusing on the lows when it's the downward market. Then when it's the uptrend market, you are focusing on the highs. So you can just do this, and okay, this one is already there. So this is more like an equal low, which is we're going to talk about that when we get to liquidity plus. So as you can see over here, this you see that using line charts, you are able to map out your structure. Then when you now get back into your normal candlestick pattern, you now know that okay, this is the low, this is the low, this is the low, this is the low. Break of structure, break of structure, break of. So all these things that happen inside here, they will not confuse your eyes. If that makes sense, you can just drop it in the comment section. Then I'll know that I'm not going to talk about market structure again. At least not in our class, or maybe in the groups. So that being said, let's head over to our psychology class. So in today's trade psychology, last week we talked about the 5 stages of becoming a successful trader, a profitable trader. Then we talked about the learning stage. Then we talked about the breakthrough stage. Now there are 2 more stages. That is the one of them is the consistency stage. So the consistency stage is actually when you have breaking through. Now, talking about the breakthrough stage, this is the learning, the struggling, or struggle. Then have the, what is it called again, breakthrough. Breakthrough. Then we have the consistency. Then we have the final one, which is scalability. Okay, so these are the 5 stages of becoming profitable in trading. Now, number 1 stage, which I've talked number 2 and number 3, then number 4, which is consistency, is when you finally break through, okay, from a particular cycle. Now, when you are done learning everything you need to learn, and you start you start withdrawing, maybe you withdraw like $1,000 today, then tomorrow and next week or upper 2 weeks later, you withdraw like $3,000. So you're no longer withdrawing those $50, $100, or $70 withdrawal from PropFirm or from your live account. Like you're now seeing, you start seeing the actual results of your learning years and years of struggle, right? That is breakthrough. Now, the next level is you will now start developing structures, system. You now start creating an environment for yourself where you can keep withdrawing that same $1,000, $2,000. Sometimes you lose like $500, from week to week, or from month to month, So when you get to this stage, you now know that you are consistent. You're no longer in that struggle where your equity curve becomes stable. All right, that is when you know that you are now consistent. You are no longer looking up, no strategy anybody is sharing with you now that means anything to you. You already know what you are trading and you trust it 100%. So that is basically when you know that you are now consistent. Now, the last level, which is actually the sweetest, is the scalability. Now, scalability are actually divided into two, right? Number one, this is basically how I put them. You might get this in a different way from other mentors. This is basically how I put them. So scalability is divided into two. Number one is diversification. Then number two is capital increase or capital scalability or scaling up of capital. So what this simply means is that in terms of diversification, in terms of diversification, you now start investing in other things. You now start investing in real estate, start investing in stocks, you start buying huge amounts of Bitcoin and Ethereum. These small meme coins, no, you're no longer the or this you are Bitcoins, you're buying Solana, you're in somewhere for future and long-term investments. That is when you now start having long-term investment. You're now trading once in a while. Trading is no longer where it's not for you. It's no longer sitting on the chart from morning to evening like you normally do. It's no longer checking your phone. Sometimes, in fact, most times people that get to this stability level, they no longer they trade the way they used to. It's more like you swing trade. They trade it for like a week or 2 weeks, and they make their profit because they now diversify. You now open businesses that also taking your time from time to time. So you no longer have that time to always sit in chat. So this is when you know that you now start scaling up. Now, the second part of scalability that of course most traders do is that their capital, they start increasing capital. They start becoming strategic about how you allocate your capital. So let's say for example, you'll be trading like 50K, 5K accounts, then you now move to trading 100K. You have 100K accounts with different cross-funds. You no longer stress yourself that much. So this is when you know you've gotten to the top and you keep yourself there. Now, is this possible? It's very, very possible. How long does it take? Nobody knows. It can take you 5 years. It can take you 3 years. It took me 2 years to move from learning to struggle. I'm currently working on systems for me to get over to breakthrough, right? So the amount of time it takes you, like I said from previous class, depends on how quick you are able to accept certain realities about yourself. Remember, you need to master yourself before you master the market. So these are the levels of becoming profitable in trading. Very simple, very straightforward. All you need to do is just for you to understand that whatever is going to take you from your learning stage to your scalability stage is what's going to keep you there. If you cheat your way from learning to scalability, you need to continue cheating to remain there. If you learn through hard working, through consistency, through paying attention, through sacrifice to get there, the same thing will also keep you there. So there is no shortcut in trading. You have to follow the process. And remember, you cannot skip any stage. Each time you try to skip any stage, let's say for example, you are in your struggle stage and you try to get $10,000 capital, something will definitely happen. It will take you back to your learning stage because you start doubting everything you know, then start learning from scratch again. So that is it, guys. And I believe I've touched everything I'm supposed to touch today. So if you have any question or anything to say, you might want to unmute yourself. We just have 5 more minutes and we're done for this particular class. Any other thing I need to share, we'll share in WhatsApp. So does anybody have anything to say? Okay. So what's going to happen is that in our WhatsApp group, I'm going to be dropping the assignments for this week. For this week, I want us to focus more on getting used to other blocks first before we can move over to the other types of blocks like the breaker block, mitigation block, and the whole lot of them. So I think that's all for this week. That's all for this class. Guys, do have a lovely weekend ahead. All right. Take care.
Thank you.